The M&G Income Allocation Fund aims to deliver an annual income of 4% on a capital base that grows between 2 and 4% annualized over the long term. The fund is designed for those clients that are aiming to achieve a growing income stream over time, with a low level of volatility between 4 to 10% annualized over the long term. The fund manager, Stephen Andrew, is a member of the M&G multi-asset team, a close-knit team of 7 fund managers that manages different funds with the same underlying philosophy. A philosophy that has been developed through the years here at M&G. It is a rather unique investment philosophy that gives a lot of importance to behavioral finance and to the effect of behavioral finance on the markets and on asset prices. The team would in fact analyze the valuations of the different asset classes in the market, but will also identify this behaviorally driven volatility that might hide compelling investment opportunities. Stephen will apply the same investment philosophy to the M&G Income Allocation Fund. The asset selection and allocation would be consistent with the objectives of the fund.
The beauty of multi-asset investing, when we're trying to generate an income growth over time and look after the capital, is that we can take the best characteristics of fixed income and the best characteristics of equity, combine them together, and then manage for the coupon in fixed income. We manage for the volatility in order to get the best out of those asset classes in a combined sense and deliver income growth and capital growth over time.
The fund can invest in a wide range of assets. In terms of equity allocation, we can invest between 10 and 50% in equity markets, with a neutrality of 30%. In terms of fixed interest security, we can invest between 40 and 80% of the portfolio, with a neutrality at 60%. Finally, we can invest in other asset classes, like for example convertible bonds or real estate securities, from 0 to 20% of the portfolio, with a neutrality of 10%. The fund is designed for a European investor, and our currency exposure reflects this objective, with a minimum exposure to the euro of 70%.
In terms of our overall investment philosophy, our first step is to look at all of the global asset markets to ascertain where they sit in a long-run valuation context in terms of how is the market wanting to be rewarded for carrying the risk of equity or of the different complexions within fixed income. This gives us a very solid underpinning to how we assess the market price today, but it cannot be used in isolation. The markets can go very long periods of time ignoring underlying value, and so it's sensible from an investment management perspective to assess the price in the context of how the market's behaving. The second part of our philosophy, the behavioral aspect of that, is a key challenge both to our behavior and to the behavior of investors globally. And it's that observation of the intrinsic link between humans interacting in the market that we try and utilize through the second pillar of our valuation framework, our behavioral analysis.